Welcome to the daily insights that matter. In a bid to boost biofuels demand, the US and Brazil are joining hands with India to take it a step further. Biofuels are basically any fuel that is derived from biomass, which could arrive from plant, algae material, or animal waste. Biofuels are a source of renewable energy unlike fossil fuels, and the benefit here is it is cost effective and environmental friendly. The US and Brazil are two of the world's largest biofuels market and are now joining an Indian-led initiative that will aim to boost demand for the lower emission energy source. Biofuels is a $110 billion market globally, with the Indian biofuels market estimated at $10 billion and is currently growing at a CAGR of 8 to 10%. Biofuels are gaining a lot of traction, predominantly ethanol, which is a liquid biofuel. The other categories of biofuels are biodiesel, renewable diesel, and other biofuels, which include biojet, heating oil, etc. Earlier in 2021, Honorable Prime Minister Modi had advocated the use of alternative fuels and brought forward a target to have blended gasoline, which includes 20% ethanol by 2025, which is currently at 10%. At the recently announced Union Budget, Honorable Finance Minister allocated Rs 35,000 crore for priority capital investments towards energy transition and net zero objective, which will eventually make India a net zero carbon emission by 2070. India currently imports 85% of its oil needs, and the slow replacement with biofuels is aiming to reduce the import dependency. At the same time, India contributes only around 1% of the global biofuel production. With the above initiatives and the India Energy Week conference to outline the roadmap, India will progress to a larger and more sustainable fuel industry. The Purchasing Managers Index for the services sector fell to 57.2 in January, missing expectations for a 58.1 reading. As you are aware, a reading above 50 denotes expansion, whereas a reading below 50 denotes contraction in the services activity. Let's discuss this. The Purchasing Managers Index for the services sector released by credit rating agency S&P Global fell to 57.2 in January after accelerating to a 58.5% reading in December. This was the 18th straight month that it showed a reading of over 50, which implies growth in the services sector. Input cost inflation in the services sector retreated to a 2-year low in January, aiding a slower and moderate upturn in selling prices. There was a mild increase in both the input costs and prices charged. However, the resilient demand enabled firms to pass additional cost burden onto their clients. The business outlook also took a hit as the overall confidence slipped to a 6-month low in January, with 80% of the firms forecasting no change in output levels in the year. As seen with the earlier reading of the manufacturing PMI, growth across the service sector lost momentum at the start of the year. There was a rise in total new businesses, which was predominantly on the domestic market as international orders decreased. Thus, there is a softening of orders, spurring caution considering the business outlook. However, the services sector has been in expansion zone for the 18th consecutive month. So what does all of these news mean for you? Biofuels have the potential to change India's energy spend and consumption. With this initiative, India can trim its oil import bill, limit air pollution, and pave the way for surplus of domestic sugar by using it in the production of fuel. This will have an indirect positive impact on you. With the moderation of the services sector and rise in domestic demand, the momentum is slightly lost but still remains in the expansion zone. This will have an indirect positive impact on you. While I say this is me, Rahil Hassan, signing off. Have a great day and take care.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.